To another episode of Life and Equity, where I talk about life and life experience and equity or finances. Today, I'm going to talk about cash flows and specifically managing cash flows and the importance of that. So there are three flows of money, and today we're going to focus on two of them. We're going to focus on inflows and outflows, inflows, and specifically managing inflows and outflows. Now, inflows is any new money coming into your personal economy. Outflows is any money that's leaving your personal economy forever. It's vital to it's vital to manage both the incoming or the inflows and the outgoing or the outflows. And the reason you got to manage it, you got to know where your money is going. If you think of money like money is called a current or a currency. The reason it's referred to as a currency is because it's always flowing, just like water, just like electricity. It's always flowing, it's always moving. And so if you are in control of your money and you're giving it direction, it can be used to benefit you and others, of course. But if you're not in control of your money, if you're not giving it direction, just like a river that's raging out of control, it's going to flow. It's going to flow away from you, and oftentimes it can cause damage, or it can be more harmful than good. So controlled flow, and this goes with electricity, it goes with water, it goes with money. Controlled flow can be extremely beneficial. Uncontrolled flow can be very detrimental or very damaging. So it's vital that you are in control of your flows, both inflows and outflows. So for the inflows, we're going to talk about tools that I use personally for the inflows and the outflows and what each one of them does and why they're important. So for the inflows, I use an app called Currence. Currence. This is an invite-only app. There is a link in the description. You are welcome to click on that. It'll take you to the Currence website where you can get more information. And if you would like to, you can schedule an appointment and we can talk about Currence for you. Again, it's an invite only. This is not something you can just download. If you want it, you have to be invited to it. So Currence and what Currence does, and I'm gonna talk about Currence and the inflow side, and then we're gonna circle back and we're gonna talk about the outflow side. So what Currence does, or let's talk about the issue that most people have. So most people have an income stream. Let's call this their income. And their income gets dumped into their spending account or checking account and gets spent. And whatever's left over gets put into a savings account, generally to the tune of, well, it's generally not very much. Total savings for retirement or average total savings for retirement is 4%, which means the amount of money that's actually going to their savings, assuming they've got money pulling off for their 401ks and retirement plans, what's typically hitting their savings account is very, very minimal. A few $100s, maybe a couple $1,000, depending on your earnings, depending on a lot of different things. Anyway, what typically happens is money goes into the savings account, and then because there's no because most people don't have any direction for their money, their inflows and their outflows, and what's happening with that current of money or currency, what happens is they overspend. They overspend in their spending, which means that they've got to pull money back from their savings to take care of their spending. This is what's called the treadmill. So Where Currence comes in, Currence is between your paycheck and your spending account. It goes right here. So let's see what Currence does or what it is. So Currence, again, is an app. It goes between your paycheck and your spending account and acts almost like a reservoir, if you will, to hold your money that doesn't need to be hitting your spending account. It makes you more conscious of your savings. It promotes savings, encourages it, and gamifies it. And it makes you more conscious of your spending. So, what this means is let's just hypothetically say you get, let's say $5,000 of net spendable income coming in, and you, whether you realize it or not, and we'll get to the spending side in a minute, but let's just hypothetically say in this case you need $4,000 a month to hit your spending account, your checking account, to take care of monthly expenses. That means the delta or the difference is going to sit in your current account and it's going to build to your target. Your target is typically 2 to 3x your expenses. So 2 to 3x this $4,000. So let's just hypothetically say that your target is, in this case, 3x, so $12,000. That's your target. Now, in this case, it's a very simple calculation. If you got 5,000 coming in and you're spending 4,000, $1,000 is being built up and accrued in that current account in that reservoir, and it would take a year to build up. Now, from that reservoir, from that current reservoir, you got your hand on the spigot, you can pour more money into your spending account if necessary. If not, maybe you're not spending as much as you thought you might. So you can actually leave more of it in that current account and build that up faster. Once you've hit your target, then and you've got your $12,000 build up. That's your target reservoir balance. Once you've got that build up, if you exceed that, and ideally you'll start to exceed it. Then what you can do is you can start doing money movements, which is saying, hey, I'm going to move this into additional cash flow engines to produce more cash flow. What that's going to do is that's going to dump back down into your reservoir and build that up faster and faster. It might be investments we're talking about. You might make some investments here that produce dividends. It might be real estate that produces cash flow. It might be a business entity that produces profits. Whatever the case may be, that you're investing into additional cash flow generators, which produce more cash flow, and you can either use it for lifestyle. You can say, hey, I want to increase my lifestyle here, or you can say, hey, I want to increase my reservoir. I want to increase my investments because I have a long-term goal of maybe being financially free. And we'll get to that in a different conversation. But for today, again, this Currence is a front-end cash flow management system that goes between your paycheck and your spending account. It gamifies, it encourages, it promotes savings, and it gives you a lot of visibility on what's actually happening on the inflows, which will lead to more visibility on the outflows. And we're going to get to that in a second here. Again, there is a link down below in the description specifically for Currence. You can click on that. It'll take you to some additional information where you can look more into it, see if if it might be an ideal fit for you. And if it is, you can schedule a meeting with me, and we'll go over your circumstances or your scenario specifically, and then I can invite you to Currence. So let's shift gears now, because again, this is the front end cash flow management system. Now let's shift gears to the back end cash flow management system. Now, I'm going to make a controversial statement here, and it's this: budgets do not work. Why do I say that? Well, if you think about any successful business entity, they often have a revenue department And then they have an accounting department. They don't have budget departments. The only entities that have budget departments are our government, and they notoriously do not stick to them. They don't budget. They blow through it every single year, which is why they have to continue to increase your taxes. So again, going back to successful businesses that have to make a profit, that have to be successful. The government doesn't have to be successful. They don't have to make a profit. They simply grab more out of your pocket, which is unfortunate. That's a whole different subject. But let's talk about successful businesses. Successful businesses of all sizes have a revenue or income department, and then they have an accounting department. They do not have budget departments. Now, why do they have an accounting department? Well, because they've got to know where their money is going. They've got to know where their money is coming. They got to know where their money is going. And again, if every single successful business has these two departments, why wouldn't every single family have these two departments? And it's pretty dang simple. And I'll show you what I'm talking about and how simple it can be. So we talked about Currence. That's an inflow. That's a front end or an inflow um, software that keeps track of that. Let's talk about the outflows now. For outflows, there are a lot of now budgets don't work, but budgeting software is actually good for accounting for where your money is going. There's lots and lots and lots of different apps, budgeting apps specifically, that you can use for accounting purposes. Just in the one I use personally is called YNAB, YNAB, YNAB. There's an app for it. It's a website, www.ynab.com. So there's an app, there's a website. Um, this is the one that I personally use. Use whatever works for you, and I'll get into details of why YNAB works for me. But there's Rocket Money that Mint, I think, Mint is now Rocket Money. There's all kinds of different budgeting apps you can use for accounting purposes, and it's purely to know where your money is flowing to or where your money is going. When it outflows, when it leaves your personal economy, you need to know where that money is going. It needs to be accounted for. The purpose of that is to say, first of all, to identify where your money's going, because I've been in the financial industry for about 13 years now, and I can't tell you how many people I meet with. I mean, it's I would say the majority of people I meet with, and I ask them, where is your money where's your money flowing to? Do you account for where your money flows? They say no. And I say, okay, well, here's your income, and here's what you're telling me your expenses are, and there's a substantial gap. Where is that money going? And they say, I don't know. Sometimes it's hundreds of dollars, and sometimes it's thousands of dollars per month. So it's a very common problem, and it spans the entire income range from very, very low income to very, very high income earners. A lot of or most people don't know where their money is going to. So we use YNAB. It is a budget software. They put themselves out there as a budget software, and I'm telling you, budgets don't work. However, I'm telling you also that I use YNAB, and we've been using it for years, and it works beautifully to account for where our money is flowing to. The reason I like YNAB personally is because I do not want my accounting software, my budgeting software attached to my bank account. I want those things disconnected. And the reason for that is because if I'm if I'm if it's attached to my bank account, it only accounts for the transactions that I make through my bank account. Well, what if I'm using a credit card? Doesn't account for it in my bank account. Therefore, it doesn't account for it if it's attached to it and I'm relying on that as an accounting software. So instead of that, I say, hey, I don't want it attached to my bank account. I want it I want it wholly separate. And I'm going to show you an example of YNAB in here in a minute. And our specifically our budget, if you will, or how we account for it, because it's very, very simple. So, so you got to, so you're not necessarily budgeting, but you're accounting for. Now, you still set up a budget. What I mean by that and I'll show you here in a minute. It's like, hey, we've got $1,000 a month to groceries. We've got 200 a month for fuel in the car, and I'll show you all that stuff. And we'll keep it real simple. But here again, I don't want it attached to my bank accounts because I may not always use the same bank account, if you will, for each transaction. I may use a credit card. I may use a secondary credit card. Um, and then, but if as long as I'm accounting for those, then I can go and pay those off at the, with the money that we've already set aside for it. So we do set up a budget to where we're allocating, hey, and I'll show you this. I'll show you this now, actually. If I, so if I say, hey, we're assigning, we're allocating $2,500 per month for these expenses. Now notice there are very few expenses listed in here. I'm a simple person. I like to keep it simple. So, and so let me pull something up here that's going to be helpful. What are things that I put in the budget, or what are things that I don't put in the budget? If it's if it's consistent and fixed, consistent and fixed, I do not budget that. I do not budget that. Why don't I budget it? Well, because it's consistent. It happens the exact same day, every single month, and it's fixed, meaning the payment doesn't change. So that might be mortgage, car payments, Netflix, um, what else? Insurance. Now some of these things are going to change year to year. The mortgage might change year to year as the escrow changes. Netflix may raise their prices periodically, maybe every 6 months or every year or whatever. Insurance is going to change maybe once a month. Um, Another one is phone. Here again, it may change, but it's generally only changing maybe annually if they increase their prices, but also there might be a change if we buy a piece of equipment. And if we buy a piece of equipment, so all of these things right here, I've got these on my own spreadsheet. You could literally do it in in a notepad or a notebook. You could do it, I do it personally in Excel. You could do it in Google Docs. So it's being accounted for, but I don't need to budget it every single month because it's the same thing and it happens on the same day. Why do I want that in my accounting? Okay. I've got that accounted for over here. Like I said, personally, I use Excel for it. I've got every expense listed on Excel, or at least these things that are, I've got these things listed out as every expense listed out. And then I've got the categories listed out, um, that I use for YNAB. So YNAB, this is going to be, and you saw it here, groceries, um, fund money. This is going to be dad's cash and mom's cash. You'll see those in ours. Cash, You're going to see haircuts. We'll get to these things. And the reason there's a reason I do these things specifically. There's dining out and the infamous Amazon. Now, these are consistent, meaning they happen all the time. They are consistent, but they are not fixed. Means they fluctuate. They can fluctuate wildly every single month. Um, I actually, yeah. So utilities could go either way. Utilities could go either way. For us personally, we have we have we're on a equal, what they call equal pay. So our utilities are the exact same every month. Guess where that goes? It's fixed and it's consistent. Guess where it goes for us? It goes up here. For a lot of people, utilities are not fixed and consistent. I mean, they're consistent, but they're not fixed. So they might go down here. You got to do yours the way, I mean, you set yours up. I'm just giving you some guidelines as to what we do. Now, these things are happening. Groceries, fun money, mom and dad's cash, haircuts, dining out, Amazon. All of these things are happening, but they fluctuate wildly. Holidays and birthdays is another one. Holidays and birthdays. So what you'll see here, see when I look at this. So you see groceries, you see fuel, auto maintenance, home maintenance. Again, these things happen. I mean, the auto maintenance and home maintenance, they're not even consistent, but they do happen. And when they happen, I want to account for them. What they aren't is fixed and consistent. So they're not on my spreadsheet. Now, these categories are on the spreadsheet because I want to account for it somewhere. Uh, the categories are there, but not a specific expense. Giving stuff I forgot to budget for. Yeah, we actually have a category right in our accounting that says, hey, this is stuff we forgot to budget for. What are some things that happen that, yeah, I mean, there's always things that happen. You might get a flat tire. Well, that would be in auto maintenance, but who knows? Something may happen. It's not something may happen. Things always happen that are unexpected, and you got to put it somewhere. So we literally have a category that is stuff I forgot to budget for. There is Amazon, holidays and birthdays, mom's cash, dad's cash, mom and Tom's haircut. Why is that in here? It's happening, but it's not consistent and it's not fixed. Sometimes mom gets her hair done once a month, maybe it's every other. Tom's generally every few weeks. Tom is our son. He's our youngest son. Tom's haircut is fairly consistent, but sometimes it happens once a month, sometimes it happens twice a month. We've got pest control. Sometimes it happens, sometimes it doesn't. We've got dining out. And that's it. Like that's all the things that we have accounted for. Now, I like YNAB because again, I'm not looking at my bank account. Now I know that I've got $2,500 in my bank account, but what I'm doing is I'm saying, hey, I'm going to assign $2,500 for these categories for the month. Now, what that looks like is I'm going to say, hey, I'm going to put, actually, I need to not do that. So you can assign these. You might do 1,000 a month for groceries, and then throughout the month, as you spend, as you go to your grocery store, as you go to Costco, then you put in the transaction, and it deducts it from what you've allocated to groceries. Sometimes you'll go over, sometimes you'll go under. And that's okay. Again, you're accounting for it. You're accounting for where your money's going. Now, eventually, after you've accounted for where your money's going long enough, you'll get fairly clear on where your money's going and you'll get consistent, and then you can start being pretty dialed in as to how much you can put into these. And you're going to be very close eventually. So let's talk about something else. Let's talk about another concept here is like why it's important to understand where your money's going. Again, Most people don't even understand where their money is going. They don't know where their money is going, which is a big problem because, it's just a, a few bucks for a coffee here, or hey, I'm just going to grab a quick sandwich over here. And it's just small expenses, but they add up and they can get quite aggressive. So when you have your categories or when you're setting up your budget, aka your accounting, there are no don't have any judgments on, should I be doing it? Should I not be doing it? Is it okay to have or is it not okay to have? It's an expense. Just account for it. Once you account for where your money is flowing to, then you can look at it and say, hey, do I get the value out of out of that expense? If it's a cup of coffee every day that you like to have, like, does that cup of coffee give you the value for what you spend on it? And you may find once you account for it, you might find, hey, you know what? I really love coffee, but I don't, like I'll get a coffee once a week instead of every single day. That's going to reduce the expense, but you still receive the value occasionally. For others, they might say, yes, that cup of coffee every single day from XYZ store, my favorite store, is like that does it for me every single morning. And it's so valuable and I love it so much. Great, keep doing it. But if you find expenses that you aren't receiving the value for, make some changes. What that will do is here again, going to this inflows and outflows. If you're outflowing and you don't like it, you might say, hey, I'm going to cut out those expenses. I'm going to cut out these expenses. So I need less and less of, actually, let me jump to this other page here. I need less of my money coming here instead of $4,000. Why don't we change this to, let's say $3,500. I only need $3,500 a month hitting my account. Well, guess what? You still got $5,000 flowing in. And if you only got $3,500 flowing out, that's gonna build up your target faster. That's gonna allow you to direct your money to these additional cash flow engines faster, which will produce that additional cash flow even faster and get you in a position of financial freedom. So the importance of understanding where your money is going, both inflows and outflows, is to eventually get you to be financially free. And the only way to do that, like if you don't know where your money is going, if you don't know how much you're spending, how much you need to spend, how much you need hitting I'm using need specifically, how much you need to have hitting your account each and every month, you have no idea how close to or how far away from financial freedom you are. Most people just spend everything that they get. But most people are okay with working a 9 to 5 and then coming home and sitting and flipping through channels the rest of the night. They're not really interested in financial freedom. Everybody says they want it, but you can tell by their actions, it's not that important to them, which is fine. So if you're not that individual, if you would like to be financially free, one of the first steps is get clear on your inflows, get clear on your outflows. Know where your money is flowing to, and then you can start giving it some direction. So again, Currence for the inflow, that's an invite only. YNAB for the outflow is what we use, but you can find that online. You can find the app for it. There are other apps, resources available. I shared with you why I like YNAB and how we use it. I shared with you also what we put in YNAB and what we do not put in YNAB. It's all accounted for. 100% of it is accounted for, whether it's on a notepad, an Excel spreadsheet, a Google Docs. You're still accounting for those expenses. It's just not something you have to really track in YNAB because it's consistent and fixed. Hope this is helpful. We'll have some more videos, but again, just to recap everything, the first step to be the first step to financial freedom is understanding your cash flows. If you don't understand your cash flows, like like that's like step number one. Well, actually, step number one is to have cash flow. You've got to have income. As long as you've got income, step number two is to understand where your money is flowing, both inflows and outflows, so that you can start directing it. That's step number one. Step number two of achieving financial freedom. If you try to jump ahead and say, hey, I want financial freedom, and I ask, well, okay, well, where's your money going? Like, then that's step like 4 or 5. You need to take care of step 1 or 2 before you can take step 4 or 5. Anyway, hope this is helpful. Please like and subscribe. And if you like the content, or if you'd like to see more of a certain kind of content, please comment, and then I can tailor the content accordingly. Thanks. We'll see you on the next episode.